Can Bitcoin get to $40,000 these upcoming months? If you've been watching me by now, you know I would never spew these garbage numbers without concrete foundations backing it. So get ready for my most alpha-packed and educational video up to date, because this video is extremely important. As always, make sure to like and subscribe for more. Right into it. Why I bring this up at all is because of an ensuing dump that is very likely to come later this year with a recession and everything related to that, like the uninversion of the yield curve and the cut of interest rates. We'll leave that for a separate video. But the main point is that during a recessionary event you tend to get an initial sell-off, also known as a capitulation event, where every risk asset gets knocked hard, gold, stocks, you name it. And obviously, with our adored crypto asset class on the furthest right end of that risk spectrum, we will also face this heavy knock. And so a lot of people, especially those that did not build any positions over this bear market, are hoping and praying for this recession to come, where Bitcoin goes back below 20K, back to lows, or makes new lows at 12K where they hope to buy. But here is the killer aspect, the fundamental point and variable that most are missing. It has nothing to do with the debate of a recession, and if we'll dump, to me that is absolute. We will crash 40 to 50%, and I'd be very surprised if we don't. But the question is, where do we start that dump from? From what price point does that capitulation occur? And this is where I want to introduce the phenomenon known as the Goldilocks zone, and why I'm about to make the case for Bitcoin getting to that 40K level, give or take, before we dump 40 to 50% from there. Take yourself back to a half a year ago, where everyone was screaming that the $17,000 low in June or the $15,500 low in November were not the Bitcoin lows because of how bad the economy was, because of interest rates, because of inflation being too high, and ultimately because of the recession that was going to wreck the markets, causing Bitcoin to dump another 50% and getting to that $10,000 level. Now notice that those narratives from last year and now are still the exact same, and they're not even wrong. Those things will cause a massive blow to the price of Bitcoin, yet the only thing that's changed is the price of Bitcoin. So those bears screaming those narratives from back then and up until now were not wrong about a single thing. The vital mistake they made, however, is assuming that Bitcoin would be at those current price levels. And they're now doing it again with Bitcoin at 27,000. And this is exactly what the Goldilocks zone is, and is what many allude to for those crazy people who say Bitcoin will get to 100,000 this year. Although I won't take it that far, allow me to now explain the Goldilocks zone. Think of the Goldilocks zone as everything being just right. Think of it like a state of nothingness. And in this state of nothingness, this Goldilocks zone, it allows markets to progress upward as they have been this first half of the year. The reason we get into this void state is because all the main narratives are alive and very much active, but are not occurring at that exact moment. If you're confused, it's about to make a whole lot of sense right now. Take last year's price action of constant dumping. This was inflicted due to two reasons: the inflation narrative and the interest rate narrative, and how they behaved relative to each other. So with inflation during these months of constant dumping, we had absolutely no clue if inflation was going to pick up again, if it was really being suppressed. And in this state of uncertainty you could not go risk on. But in 2023, the inflation narrative has been killed off drastically. It's in a state of cooling off. Now take interest rates. During last year we had no clue what the terminal rate was going to be, if the hikes were going to kill inflation, how long they'd go. Again, a state of uncertainty, meaning going risk on was not an option. But in 2023 we got a real idea of what the terminal rate was going to be. We got a good idea of Powell's stance, proven by how every rate hike and pause that came after was priced into the T and did not catch markets off guard. And I know what you're thinking, pain, these are still variables and we are primed to face a boatload of uncertainty and chaos in the future, with the biggest headwind being a recession, which is the most chaotic thing of them all. But ladies and gentlemen, that is exactly my point. Those uncertainties and risks of a recession and inflation and interest rates will occur again, but later. And in the meanwhile meaning these last 6 months and what I think will also be the next couple months, the markets have the green light to trend upward. Because the markets don't stop, and that's the exact definition of a Goldilocks zone. An economy where inflation is not too high and not yet in a recession. As last year we already got the initial panic sell-off that comes with these things, and we will get this panic again. But for now, let's party. And this perfect mixture has allowed for the S&P 500 to be only 9% off highs, for the Nasdaq to be 10% off highs, for Apple and Microsoft and Nvidia and for gold to be making new all-time highs, and for the British FTSE and German DE 40 and Japanese Nikkei, and so many more international stock exchanges to be making all-time highs. Think of the Goldilocks zone like a bear market rally but on crack, excuse my language, where this type of bear market rally can literally lead to all-time highs. So if we go to Bitcoin, which also experienced the benefits of the Goldilocks zone going up 100%, the question for us is the Goldilocks zone done? And if not, what price targets can we expect? Well, the Goldilocks zone is something many macroeconomists use for those who say risk assets are going up if they do at all. And they've been very right so far. But note that like with all things, sometimes people take it too far, where those like Gert van Leyen and Nijgen Tropic and Alamzada, and probably the most famous of them all Henrik Seeberg, having targets of like 100k Bitcoin and $6,000 SPY. Obviously they use other indicators and fundamentals and systems as well, but I personally wouldn't go for those levels. But what I do believe is that we're still in the thick of the Goldilocks zone, as a recession is still quite a few months away and inflation has been cooling even faster than we thought. So who knows what's primed for these next couple months? We very well could consolidate, go lower, but in my opinion risk assets still have the green light to trend up, where perhaps a $40,000 BTC wouldn't really surprise me, where we then get our recession, break down extremely hard by 40% down to 24,000, and then start our next bull cycle. And notice the $40,000 level I mentioned is kind of at the end and kind of insignificant, because that was never the point of the video. The point was to provide you amazing insight, and hopefully I've done that. I say this to prepare you for the likely incoming comments that will be extremely triggered about this video title, but again it was never about that. In summary, it's about how the mechanisms that got Bitcoin from $15,000 to $30,000 is still very much active, and why you must know about them when you prepare for a recession and your investment portfolio. Thank you so much for watching. If you made it this far, you're a legend. Like and subscribe for more, and to support the content sign up to one of the exchange links below for big bonuses and non-KYC. None of this has been financial advice.